Rod, take a second, talk a little bit about, well, one, your thoughts around this idea, the fact that life insurance companies allow agents to design policies differently.
Yeah.
And maybe what are the pros and cons that come with that? Because really, like, there's pretty drastic, like there's pretty intense pros. Like we can do a lot with it, but man, it can also be abused and be really problematic.
Yeah. And I think it comes from the evolution of the product. So the whole idea, like I mentioned earlier, the reason we have the cash value even as a thing is because in order to make it permanent without you having to just every year just keep paying higher premiums is to build in this cash value. Well, as soon as they built in the cash value, now there's money sitting in your account, and what's it going to do? Well, it makes sense that it should grow. Okay, well, great. How's it going to grow? And how do we determine of the money that you put in the policy, how much goes to the cash value versus how much is going to pay for the premiums today, or the costs toward the cost of insurance today versus later? So that's where it evolved to a place where as an insurance agent, when I sit down and I build out a whole life policy, I'm literally telling it, this is how I want you to build it. Either on the one extreme, I want it to be really simple. Just give me the least amount of premium I have to put in for the $1 million of insurance that this person wants. Or in the other extreme, I can say the amount of insurance isn't as critical as it is that I want to have more money landing in the cash value. Therefore, and some of the companies even have these solves that are built into it. And so I can say, give me what's called a minimum non-MEC. Man, that we're going to unpack that a little bit, but basically what goes back to what Blake was saying, there are tax advantages with a life insurance policy, but you only get those advantages if you follow the IRS's rules, right? The policy has to qualify as their definition of life insurance as the IRS has defined it. Well, that means is that as I'm putting money into it, I have to have a certain amount of insurance associated with the policy in order for it to get those tax advantages. But if I pay any more than that, if I pay for any more insurance than that, now I'm starting to eat into the cash value. So as an agent, when I'm sitting down and building the policy, structuring it, I have to know what I'm trying to accomplish, or what the individual who's looking at the policy, what they're trying to accomplish. And that gives me the answer as to what I need to do. However, it comes with a very large conflict of interest as on the part of the agent, because if I'm the one that's educating someone on this is how life insurance works, and I'm the one building the policy, well, I could, if I didn't have my scruples right, I could mislead somebody or not give them the complete picture and maybe give them a policy that kind of does what they want, but also puts more money in my pocket, right? That possibility exists. And so
and this is what we like. Sadly, we see so much of. We see enough of this. Yep. I shouldn't say so much. We see enough of it that's where life insurance can get a bad name. Here's the interesting thing. I think back, Rod, and basically what we're breaking down here is that well, to both of your points, we can design these in different ways, and if they're designed, well, we would say properly. What that means is just that it's focused on creating cash value for the policyholder. But if it's done that, and if you were to go back, or this is the same thing for universal life policies back in the day. Mm-hmm. If you were to have funded it to that max funding level, like we always do, there wouldn't have been problems with the original ULs, right? And so what happens is that because of the ability, or because an agent, because we have this opportunity to manipulate the way that the product is actually designed and working, it has, from my perspective, created a huge black mark in the industry. And if it was up to me, if I'm being totally honest, I would love it. Now, it would create a little bit of a challenge for us because we wouldn't be able to differentiate ourselves as well. But if the only thing that could be sold when we're talking about permanent insurance is maximum cash value, minimum cost, everybody would be better off for it.
Yeah.